So this trader turned 70K into $1.28 million. Now, I didn't take this trade. I want to make that very clear. I did take a similar trade, and because I did see the momentum happening with GME, I did take a trade that day on the $21 calls for Friday. Well, now this Friday for tomorrow. But in this particular case, I was talking to some people and, reading some things online and kind of wanted to break down what I saw and why it was a good trade and why it was a smart trade and lower risk trade. A lot of people always say things like insider trading or someone always knows, but realistically, this trade was a pretty safe bet. Now, let's break it down and kind of look over what we saw by looking at these charts. Last Tuesday, they bought some calls for GameStop, $20 calls expiring on December 8th of 2023. They bought some calls for 11 cents each, which translates to $11 a call. And we'll see that they exited the next day at around 1.71 average. So they didn't even hit the top of it. And they exited somewhere around here for 1.71 each, which is, $171. So again, they bought the calls for $11 on Tuesday, held them, and then they sold them the next day for $171 on average. And they turned 70K into 1.28 million. Now, I understand how easy it is to scream, oh, somebody knew, insider trading, whatever. But if you actually look at the GameStop chart, so this is the GameStop chart, this is the daily. If you look at the GameStop chart, if you look at the daily on this, you can see that, GameStop was pretty low. And before this Tuesday where he bought it right here, before he bought, prior to this, about, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9 trading days before that, it hit a 52-week low. It bounced up. So it hit 1183, it bounced up. And then if you come back down here, 9 days later, it's in that same spot. It's a pretty low for GME. That's in a pretty low spot. If you talk about, all the stuff behind GME with the meme stock and the run up. So there's still some kind of volatility with GME. If you're looking at it, obviously you'll see that there's some pretty big swings here, but people are going to, chase things. That's one of the biggest things with stocks, and a big problem that traders have is FOMO. Even if you're looking at today, I mean, after earnings, there's been a pretty big run up. Like, you could have bought calls today after the earnings dip and made money. But anyways, if you're looking at that low as a trader and you're seeing the potential that GME has, right? You're down here at 52 weeks low. Your risk is very low. This is a relatively low risk trade. You're risking GME, which has a lot of support. They are a company that people are still saying that, oh, it's a brick and mortar store, they may be going bankrupt. Put that all aside. GME has a lot of passionate investors that are online constantly talking about it. There is still that meme stock association with it. But as a business model, GME is still around. We're not going to break down things like that in this video. We're not going to talk about meme stocks and all like that. I just want to put the emphasis on, if you're looking at this from a technical analysis point of view, when you buy right here on this Tuesday that he bought, it has a good potential of bouncing. Now, I want to make this very clear. People can say luck, people can scream insider trading, whatever, but you can't get lucky if you don't make a trade. If you don't know what you're doing, if you don't put a trade on, you'll never get lucky. Who knows what this trader was looking for? Maybe they were just putting in a bet because it was a week before earnings and they're anticipating a move up towards earnings or after earnings. Whatever they were looking for, it doesn't matter. Because what ended up happening, it started running up that day on the 28th. So it bounced off, it turned green that day. They bought those calls for 11 cents, which turned into $11. That's how calls work. And it started running up. And now the next day it gapped up. So what does that do to the calls? So here, for the calls, they bought them around here. The next day, GME was green. It had just bounced off the 52-week lows from about 9 days prior, about 2 weeks prior. And it was holding up. So relatively, if you're looking at this from a risk to reward perspective, you got all this upside. And your downside is if you break that low on GameStop, then you sell. You sell, you take a small loss, and you go on to the next trade. So, yeah, they bought it there. And then the next day, we saw that massive move up. It started moving up that day. I mean, That same day, they were already up about 100%, 150%. It gapped up the next day, pulled back, kept running. Who knows what this trader saw? They looks like they sold around here at about 10 a.m. I am in the West Coast, so that's Pacific Standard Time. So this is 1 o'clock market time. So 1 o'clock Eastern Time. So they sold around here. So this is some buy volume on these calls. This is sell volume on this calls. So they sold around here. A lot of people make the mistake of thinking that with options you need to hold for expiration. So I'm going to make another video talking about options and how to trade options, but that's probably one of the biggest mistakes, and it's a mistake that I made when I first started trading, is not accepting your wins. And that's easier said than done, obviously, especially when you have more money. If you have 100% of $10,000, you're making $10,000. That sounds great. If you have 100% of $100, you're only making $100. And I say only because that's how people see it. People look at these trades and they think that you should be making a huge amount of money every single time. You don't need to make a huge amount of money every single time. Little wins add up. Big wins like this add up. But what I wanted to show here is that you can call it whatever you want to call it. You can call it insider trading. You call it luck. You can say somebody always knows. But you don't get lucky like this if you don't take a trade. So what I did is I actually bought the $21 calls, I believe. And I bought a couple of $21 calls, and I did it the next day. So I did it on that Wednesday after I saw the run up happening. And so I bought them around here at 75, and then, you know, I sold them for like right here for a small 120% gain. But again, it's learning from our trades and looking at the past and seeing what we could have done. In hindsight, if we're looking at GME, we're looking at the daily chart, and you're like, you know, GME is pretty volatile. Okay, it hit the low, 52-week low. Okay. Oh, wow, on Monday, it hit the low, but it didn't quite hit 1183. What we hit a low of? We hit a low of 1189 that day. So 1189. The next day, it opened up at 1190, slightly came down to 1189 and started taking off. So that's when that trader bought calls. They're already up 100%, 120% by the end of the day. The next day they gapped up. They're up 1400% before they started selling. And this is a big mistake that traders will make. They're afraid to buy down here. But that's where you're getting your best odds. That's where you're getting your best risk to reward. And that's something that I'm working on. And of course, I'm going to continue to work on it. I'm going to analyze trades like these to see how I can do the same thing in the future. But looking at this stock, that was a smart trade. You're risking breaking this and you sell. But it's such a green day. Maybe the next day it pulls back and you lose and you're back down above 50%. But at that point, you're already up on the day. You could sell half and be on a risk-free trade. This trader obviously held through the next day and sold them all. So again, I want to clarify that I did not make this trade, but I wanted to break down the trade as a way to analyze what was this trader looking at? Why did they take this trade? What can I look for in the future to make something similar, to take a trade similar to this? It is risky. Trading is risky. I'm never going to say that there's a risk-free way to trade. Any trader that tells you that is lying, and they're probably trying to sell you a subscription. I've been doing this now for about going on 3 years, and it's hard. Trading is hard. But we need to look at things and analyze things from the past to see where we can be in the future. And I've made a lot of really good trades. I've made a lot of mistakes. You know, the biggest thing that every successful trader talks about, from what I've seen, is risk management. If you cannot manage your risk, you're not going to be a successful trader. That is definitely my biggest struggle, is managing my risk and admitting when I'm wrong. But again, I just wanted to break down this GME trade from last week. So I hope this can give you some insight into how this trader was able to turn 70K into $1.28 million, and what you can look for to go. Like if you imagine if you put $100 in here, you would have made $1,400. If you would have bought 10 of these calls, you could have, you know, turned $110 into, what is it, you know, 1540, something like that, 1540, $1,540. If you would have put 5K in, you know, you could have 14x'd it. So the potential is there with calls and options. And this is in a 2-day span. I want to make that very clear. This trader bought time. I want to also clarify that this trader bought time. They weren't buying weeklies. They weren't buying calls that expire the same Friday. They bought these calls on Tuesday, November 29th. The closest dated calls would have actually been December 1st. This is a chart of the calls that would have been for the weekly, and some people traded these. It looks like, you know, there was volume on these calls. Some people traded these. Now, on Monday morning, these calls were worthless. These are weeklies expiring on December 1st. The $20 calls for GameStop on the $20 calls for GME expiring December 1st. They were worthless on Monday. They were worthless on Friday before that. They were down to a penny, which is $1 a call. So on Tuesday, you know, there was a little bit of volume, it looks like here. So somebody bought some weeklies for around $3. Looks like a high of $4. They were kind of fluctuating. They went up to $5. And then Wednesday, you have that massive move. You have the IV spike, everything going up. These things took off. People bought them at the open, it looks like. And then even if you would have bought them on Wednesday, which was this November 30th, you could have got them down here. A lot of people, like, say you chased in the open, you chased in the open, you pulled back. If you would have been like, okay, well, I'm gonna chase these. I bought them up here at 30 cents, you know, which is $30. And then, oh no, we pulling back, but we never really broke that opening mark where they opened at $15. So they come down. If you would have held them, you could have even went from 30 cents up to, you know, 108 if you would have sold at the peak. But this is the momentum of the weeklies. So I would say the weeklies had a higher risk. Like, yeah, people think of weeklies as a way to make a lot of money really fast. They are riskier, and we could break that down again. But so these were the weeklies. There was some volume on it on the Wednesday. But again, looking at the other trader, the trader bought these calls. The trader started building his position on Tuesday, the day before the run up. Who knows what happened? Again, they probably could have just been looking at the chart, saw that GameStop was due for a bounce. Maybe they were looking for 100%, 200%, 300%, 400%, 500% winner. Who knows what they were risking, what their trade thesis was. But they didn't hold them till the end. They were up massively. They took their win, they took their profit, they got out. And now today, which is the day before expiration, they expire tomorrow, they're only worth $2. So this is the power of options, guys. This was a very, very interesting trade. That's why I kind of wanted to break it down and share that with you guys to see what this trader was looking at. By no means am I saying that this stock is going to run again. By no means am I recommending that you buy this stock. I do recommend that you take some time, and if you don't understand what I'm talking about, calls, options, how they work, you need to take some time and learn about them. I am going to be making some videos and breaking down what they are. Again, I've been doing this for about 3 years now, and I've learned a lot in the short amount of time. I think that there is still a lot more to learn. Of course, that's probably one of the scariest things, is that when you start learning about something, you realize how much more there is to learn. But there is a way to simplify things. There is no way to avoid risk at all. But if you want to make money, you do need to risk money. This is not financial advice at all. This is education advice. Take the time, learn, analyze the market, see why things happen. Stop blaming the market for what happens to you. Stop blaming other factors for why you're losing money. You're losing money because you don't know what you're doing. I can say this because I've lost money because I don't know what I was doing. I've lost money because I didn't know what I was doing. I've lost money because sometimes I still get kind of cocky. I don't admit that I'm wrong, and I won't take my trade off. And so another reason for this video is to hold myself accountable. But I just wanted to share this possibilities on what you can do with something like this. So I do hope that this video helped you understand what this trader saw and why they placed this trade. And I don't know, maybe they were insider trading, maybe they did know what was happening, but it doesn't matter. Place your trade, stop blaming others for why you're losing money. The only person you're competing with is yourself. Again, this is not financial advice, this is educational advice. Please take the time to learn about what you're doing. Stop blaming outside forces on your circumstances. Do something better. Do something and learn. There's nobody that can help you except for you. Stop putting your fate in someone else's hands. Stop blaming others for your misfortunes, and start holding yourself accountable. Holding yourself accountable is what's going to take you to the next level. There's no such thing as a risk-free trade. Do not believe anybody that tells you that. But there are ways to lower your risk. So I'll see you in the next one, the next trade breakdown, the next concept video I make. Let me know in the comments what you want to see. Again, I highly recommend seeking education. This is education advice, not financial advice.